Hello traders, you're welcome to this video. In this particular video, we are going to be discussing how to calculate moving averages. So in case if you have been wondering how the moving averages are being calculated, perhaps you use moving averages for your strategy, but you just want to understand how it is being calculated. Then in this video, I'm going to be showing you that, okay, both the simple moving average and the exponential moving average, okay? So for a start, what is a moving average? A moving average is a tool or an indicator that is used to smooth out price data by creating a constantly updated average price. So moving averages usually create an average price. For example, just like how the name implies, moving averages. So as more prices are being created over time, the moving average kind of smoothens out the price data and creates an average depending on the period that you impute. For example, we know that moving averages here you decide the period, the number of days that you want the moving average to use to make the calculations. Using that number of days, the moving average then creates an average and use that to smoothen out price data. It helps to identify trends over a specific period and it can filter out short-term fluctuations, making it easier to see the underlying trend. So now we're just going to break down the two popular types of moving averages, which are the simple moving average and the exponential moving average. Now, starting with the simple moving average, the SMA calculates the average price over a set number of periods, giving equal weight to each period. Note that the SMA gives equal weight to each period. For example, let's just choose the period 20, for example. Now, let's say we are calculating, or let us just make it smaller. Yeah, let us use 5 days. Okay, let's just use 5 days to make it smaller. Okay. Now let's say that you are calculating a 5-day SMA, which is this 5-day SMA. Now add up the closing prices for the chosen period. So let's say, for example, now remember that the moving averages does these calculations automatically for you, but this video is just like trying to explain how the calculation is being done. Okay, so now this is the 5-day SMA. Now what it does is that it adds up the closing prices for the chosen period. Remember, it's a 5-day period that we selected, okay? So for example, if the day one closed at $50, this particular asset is US oil, okay? We can see the price around here. So let's say if day one now, from the 5 days that the moving average is using to make the calculations, as time goes on, it keeps on making the calculations over more days. Like the first 5 days that it's used to make the calculation, then as time progresses, the moving average can make another calculation based on another 5 days and all of that. So let's say for the selected 5 days, the day one closed at $50, maybe day two closed at $52, maybe day three closed at $53, day four $54, day five $55. This is just like an example, right? So we are going to make a sum of the prices that each day closed, okay? So, and remember that the apply to is close, right? This is an important setting also that we need to like look out for. If you are using the close price, yeah, the close price is what we are using to make the calculation. If you want to use the open price, you can select that. If you want to use the high price, you can select that. But the close price is like one of the most common that is being used, okay? But you can decide to choose your settings, right? So we are using the close price. So the prices that the selected 5 days closed is what we are adding up. So we add 50, 52, 53, 54, and 55, and we get $264. Now the next thing that the moving average does is to divide the sum by the number of periods. So in this case, we are using 5-day period, right? Which is 5, okay? We are using 5-day period, and we got $264 as the sum of the prices of the 5 days, right? So we're going to be having $264 divided by 5. So what we have is $52.8. dollars. Okay, I already did the calculation. $52.8, 264 divided by 5. So that's the 5-day simple moving average. So over that 5-day period I was used to make that calculation, the moving average averages the price to $52.8. So over time, the averaging of prices now determines the movement of the moving averages. So basically, that is how the calculation works for the SMA. Now let us go to the EMA. Okay. Now the EMA is similar to the SMA, but it gives more weight to recent prices. Now we're just gonna change this SMA to EMA right here. Change it to exponential. We're gonna leave the period to 5. We're gonna still leave this to close, and then just watch the difference. It reacts to prices faster. You can see that it kind of changed, getting tighter to price. Okay, so it gives more weight to recent prices. It makes it more responsive to new data compared to the SMA. So now, how to calculate the EMA is that you need to calculate, well, the moving averages does it for you automatically anyways. It calculates the SMA for the first EMA period. So if it's a 5-day EMA, for example, this 5 days what we are using, right? The 5-day SMA is going to be the starting point. Okay, it's going to be the starting point. Then the calculation for the EMA is quite more complex, but it's not so far-fetched. And the moving average basically does it for you. It's just for those who are like interested in knowing how this wonderful indicator that many traders use, how it does its calculation, right? So now after the SMA value has already been gotten, um, the EMA period uses the 5-day SMA as the starting point, and then to calculate the smoothing multiplier, which is the weighting factor, because the EMA uses a weighting factor, WEIGHTING, this is a weighting factor. Okay, so the multiplier is going to be equal to 2 divided by, it's going to be 2 divided by number of periods plus 1. Okay, basically. So this is what the multiplier uses to do its calculation, right? This is the formula. So the multiplier is equal to 2 divided by number of periods plus 1. So for a 5-day EMA, the multiplier is 2 divided by, remember we are using the 5-day EMA, right? 5-day, 5 period. So the number of periods is going to be 5 plus 1. So it's going to be multiplier is equals to 2 divided by 5 plus 1, which is 2 equals to, which is equals to 2 divided by 6, which is going to give us 0.333. Okay, 0.333. Now, the third step is the EMA is equal to the current price minus the previous EMA multiplied by the multiplier plus the previous EMA. Okay, I'm just going to write that here. Yeah, this is for those who are really interested in knowing how these things are being calculated, right? It's quite interesting though. So we have the current price minus the previous EMA current price minus the previous EMA multiplied by the multiplier plus the previous EMA. Okay, so this is the formula. So now the current price is from day 6 and the previous EMA is the day 5 value. Remember, it's a 5-day period calculation. Yeah, it's a 5-day period calculation. So the current price now is going to be from day 6 because it was the previous 5 days that was used, right? So now let us assume that the day 6 closing price is $56. Just an assumption. Now you're going to plug it into the formula to get the updated EMA, right? It's as easy as that. Once you plug it into the formula, so you're going to have the current price, assuming that the day 6 closing price is $56. You're going to have the current price minus previous CMA, then multiplied by the multiplier. We know we already calculated the multiplier. These are give us a value of 0.333, then plus the previous EMA. Okay, so that gives you updated EMA. So why are moving averages important? The SMA helps identify long-term trends by smoothing out price fluctuations. On the other hand, the EMA is more responsive and useful for identifying recent price movements or reversals. So both are actually crucial for trend analysis and they can both help you spot potential entry or exit points in the market. And by mastering these, you'll be able to be better equipped to understand and predict market movements. So I hope you found this video insightful. Kindly like and subscribe for more trading insights. And don't forget to hit the notification bell so you don't miss out on further updates. Cheers and happy trading, guys.